G'day guys, Mitch here, Anthony GT Mitchell from Finance Fitness Coaching and the Wheels of Wealth. Just a quick one about how we look at assets and liabilities, because an entrepreneur will look at an asset and liability differently to an accountant or a banker or a solicitor, etc. will count as what an asset and liability is. Especially during these times now where you go to work, you're a PAYG employee, even for a high-powered company, and you are at danger right now because you have one income, and that income is your PAYG job. Now, nothing wrong with that, but unfortunately, we've been sold overboard by a system that does not reward PAYG employees. You just go to work, pay your bills, but you can never really get ahead. Now, why is that? Well, during this time, the COVID virus and the GFC and every other time, the government says we're going to quantitative ease. We're going to print money. Now that means that the cost of your living, bread, milk, electricity, even the water, like the water bills, on my rental properties, the water bills are now more expensive than the rates bills. Everything goes up. And so you've got to work harder for money to pay the same living lifestyle that you had before, and it's very, very hard for you to actually get an asset. And then when you go and talk to someone like a financial planner or an accountant, and they say your house is an asset or your car is an asset. Now, to a true investor and entrepreneur, that's bullshit. An asset is something that provides a positive monthly income. Let me say that again. An asset is something that provides a positive monthly income after all expenses. Now, a liability is something that takes money away from you on a monthly basis. I'm not talking annually, I'm talking monthly. We annual out the monthly payments anyway. But the difference between an asset and a liability is remarkable, the way that an investor, an entrepreneur thinks about it, as opposed to a banker or an accountant thinks about it. So technically, for accounting purposes and for legal purposes, they have to call them assets on a balance sheet, but they also have to balance off the balance sheet if it didn't work out and call that equity owner's equity. So if you know anything about accounting, you'll know what I mean. It's called double entry accounting. But anyway, that's a lesson for another time. But what really helping me at the moment is the fact that I have multiple assets. Okay, I have multiple rental properties, I have multiple businesses that are paying me a net profit without me having to be there every month. So that's something for you to think about. I don't say that to be mean, I don't say that to boast, but even if it's $200 a month extra that you bought this business for, or a little rental property or whatever, you start small and you build up, that $200 a month could really be helping you right now. Because you've lost your job, that's $50 a week. You could say, right, well, at least I've got bread and milk and baked beans or what are covered, right? I know that sounds ridiculous, Some people will use their credit cards, which is another liability adding to your expense every month. So just remember, an asset is something that brings money into your household or into your financial statement every month. So your house is not an asset. It costs you every month to live there, yeah? So a liability is something that costs you every month to own. So start small, have a read of my book, Negotiation for Real Estate Investors. Have a look at got some marketing and some, if you're interested in learning more, then just email me or hit me up below, and we'll start a bit of an education process for you guys. Just what I've learned. I mean, I don't know everything. I'm still learning myself. Don't get me wrong. I've been known to make mistakes. That's why I can teach you what I can, because I've made mistakes before. So feel free, hit me up. Remember, an asset brings in income every month, and a liability takes away income every month. See you on the side. This is Mitch.